You make $60,000 a year. That's $5,000 a month. You see that number on the offer letter and think, I'm good, I can work with this. You're already doing the math in your head. Apartment, car, maybe even save a little. That number feels solid. Then your first paycheck hits. It's not $5,000. It's around $4,000. Where did the other 1,000 go? Nobody stole it. The government took its cut before you saw a single coin. That happens every month, whether you like it or not. Let's break it down. On a $60,000 salary, federal income tax takes roughly $5,100 a year. Social Security takes another $3,700. Medicare takes $870. And if your state has income tax, most do, that's another $2,400 on average. Before you've spent a dollar, over $12,000 is gone. That's $1,000 every month that you earned but will never touch. So you take home about $4,000 a month. Feels like a decent number. Then rent shows up. The average American household spends $2,189 a month on housing, according to the Bureau of Labor Statistics. That includes rent or mortgage, utilities, and insurance. On your $4,000 take-home, that's over half. Gone. Day one. Next, you need to get to work. Transportation costs the average American $1,110 a month. That's car payments, gas, insurance, maintenance. If you don't have a car, it's trains and buses that never come on time. Either way, moving from your home to your job and back costs $1,110. That's 17% of everything you spend. Now you need to eat. The average household spends $844 a month on food. That's groceries and eating out combined. If you're single, it's around $400 to $550. For a family of 4, over $1,000. And those numbers went up 3% just in the last year. The bread didn't get better, it just got more expensive. Healthcare, $516 a month on average. That's your premiums, prescriptions, co-pays, and the stuff insurance decides not to cover. Which is more than you think. According to the Kaiser Family Foundation, the average family health premium hit nearly $27,000 a year in 2025. Your employer covers most of it, but your share is still around $571 a month. Let's add it up so far. You started with $5,000. Taxes took $1,000. Housing took $2,189. Transportation took $1,110. Food took roughly $500. Healthcare took $516. That's $5,315. Your salary was $5,000. You're already $315 in the hole. And we haven't even talked about your phone, your internet, your clothes, your subscriptions, or anything fun. This is what $60,000 actually looks like. The median full-time income in America is around $63,000, according to the Census Bureau. That means roughly half the country earns less than this. And this doesn't even balance. The average American household spends $6,545 a month. Take-home on $60,000 is about $4,000. There's a $2,500 gap every single month. So how does anyone survive? Two ways. Either you earn more than one income, dual-income households are the only ones where the math actually works. Or you go into debt, and most people choose option 2 without realizing they chose it. They cover the gap with credit cards, month after month, slowly sinking. And here's the part that really stings. Prices haven't gone back down. Inflation slowed to about 2.4%, but that doesn't mean things got cheaper. It means they got expensive slightly slower. Since 2020, the average household spends $1,434 more per month than 4 years ago. Your salary did not go up by $1,434 a month. Auto insurance alone jumped 46% between 2022 and 2024, nearly half. Same car, same driver, same road. 46% more expensive. Housing costs for homeowners went up 7% in just 1 year. None of these numbers asked for your permission. They just happened. And your paycheck absorbed the hit. This is why your salary feels like nothing. It's not because you spend too much. It's not because you buy too many coffees or eat out too often. It's because the basic cost of existing, roof, food, transport, health, has outpaced what most people earn. The math was broken before you ever got your first paycheck. So what can you actually do? First, know the real number, not what your offer letter says. What actually hits your bank account after taxes. That's your real salary. Everything starts there. If you don't know what you actually take home, you're building a budget on a number that doesn't exist. Second, the biggest lever you can pull is housing. It's 33% of everything. Every $200 you save on rent is $2,400 a year. That's the difference between drowning and breathing. A roommate doesn't sound exciting, but $2,400 buys a lot of excitement. Third, transportation. If you can cut a car payment out of your life, you save somewhere between $400 and $700 a month. That's the second biggest drain. A used car paid in cash, public transit, biking, whatever works. The goal isn't comfort. The goal is keeping more of the money you already earned. Your salary isn't the problem. It never was. The problem is the distance between what you earn and what it costs to exist. And that distance has been growing every year for decades. Knowing that doesn't fix it, but it stops you from blaming yourself for something that was never your fault. That's where your money goes. $5,000 earned, $4,000 received, $4,000 spent before you even think about living. Now you know the numbers, and the next time your account hits zero on the 28th of the month, you'll know it wasn't you. It was always the math.